Good morning, traders. Today is Friday, December 16th. My name is Charles, and this is the Pirate Traders live stream where we talk about the ES, the NQ, and how they move through a two-way auction process. All right, well, I want to start today with a couple of quick announcements just to make sure everybody's on the same page about a few things. First and foremost, today is the last day I'm going to be live streaming for the year. I'm taking the next 2 weeks off. And so I won't be doing any live streaming. I won't be doing anything market or pirate trader related at all. So I won't be responding to emails. I won't be posting on social. I won't be on the Discord. So I just wanted to start off the day by making sure nobody thinks I'm dead. I'm just taking a few weeks off. I'll be back here once again on January 2nd. Okay. As far as between now and then, there's a discount code in the comment section there. For using discount code HOLIDAY, you'll be able to get 15% off the e-course between now and the new year. I also just wanted to let you know ahead of time I will be raising the price in the new year to $150. So get it while it's hot. Get yourself a little early Christmas present or Hanukkah or Kwanzaa or whatever your thing is. Even if you're an atheist, you should get yourself an e-course and do it over the next couple of weeks while the getting is good. All right, with that, let's talk about the market because it's about to open. We did have a pretty big sell-off, but I'm not bearish on it. So I see this as good old-fashioned opening inside the previous day's range. And so we will treat it as we always do. We're going to look for chop this morning. And normally I would use yesterday's low. I'm actually going to use this node right here at around 11,380. And then this node up here around 11,460. I'm going to use that as sort of my chop zone parameters. So I'm assuming the market's just going to chop between those two levels. And I'm watching for signs when it's ready to make a move outside of there. So if it is able to push up and get above this node right here and start to build some support, I would think it's going to head up to test the overnight high, and then I would look for support up there and monitor for continuation higher. Same thing with this node down here. If they're able to push below that, come up and find some resistance, I would look for continuation lower. Otherwise, I think we'll probably just chop between the two. It is worth noting that today is like a quadruple million options expiry day. So that means there's going to be a lot of strange activity. The market will make moves that are kind of hard to explain. That's somebody rebalancing something somewhere. So we're just going to keep in mind that that may happen today. And I also just note that often on these type of days, the market might just go sideways in a tight range because there's so much activity happening. So we'll have to wait and see. It doesn't mean we can't get volatility. But I am expecting chop, and I gotta see proof that we're ready to break one way or another before I'm gonna get excited this morning. Because of all them options that gotta get rolled over. Oh, that was the NQ. Good catch. So yeah, we're looking for a gap fill on the ES and then the exact same thing. So node, chop, sideways. All right, stopping one tick short of filling the gap increases the odds we got to fill that gap. It's also weak because it's only 69. Wow. So we're testing a half back here at 39.01. Can that act as support? Novice Trader says barely touched zero on tick. We're nowhere near zero. Overnight inventories net short. Focus on that gap fill. Okay, so being that I was talking about the NQ there, let's now get specific with the ES, what to look for. So I do think we're going to get a chop zone, as I said, between these two major nodes from the overnight inventory. But we can get a signal as to which way it's going to try to break first based on how it handles this gap right here. So we know that there's a higher probability that it's going to want to come up and fill that gap. That means get to yesterday's low. Once it gets there, though, we will get an indication of where the market's going from there. It will either get there and then keep going up into yesterday's range, in which case we're looking for resistance up here in this node around 39.27, or it'll just kind of poke up there and then get rejected right down. If it gets rejected right down, we will consider that a gap and go. That is bearish. So then we'll be looking to see, can it pass back through the opening price, which is at 38.97. If it can, we would look for continuation lower. Now, as I said, I don't think they're going to get much for it because we got this big node of support, and it's that options expire Friday, right? So I'm just really predicting chop, and so they're going to have to convince me I'm wrong, and that will really take breaking through this node down here to really get bearish, or up there to really get bullish. But if we do get a gap and go, we can head down and certainly test it, see what happens. So then you say, well, Charles, all of that makes sense to me. How is this not a gap and go? We just tried to fill the gap and fail. Well, it's very, very weak that we stopped that close. That tells us it was the bots, right? Oh, there he is. He's still there. So he's still got his iceberg sitting up there. Oh, no, actually, that's where price currently is. Sorry. So it would have been up here at 08. So anyway, that was a bot that sold right there, right? That's what they do. They sell right at exact levels in order to get you to think the market is rejecting and go short below that level with your stop above it. So the fact that that's still there just makes it very, very weak. It tells us there's liquidity in here waiting to do business. But if the price passes back through the open now, then it will count as a gap and go. Just not one that I would trust. Sorry, that was a lot to explain. I probably made it more complicated than I had to. All right, so that's the gap and go. We're looking to test this area down here around 38.87 and then see if we get some support there. Jason, smash the like button, you degenerates. Uh, happy holidays. Please like and subscribe. Fighter pilot PMI at 9:45. Oh, joy. 6 minutes to some volatility. Another sign of weakness here for the sellers. The fact that they were the 20 moving average, both indices, not real humans selling there. Computers and overnight inventory still net short. So we are looking for support and a little bounce. Okay, so now the question, 3,900 is halfback. Can that act as resistance? When the market is chopping like this, if it's going to go one way or another, it often holds at halfback before so. So if we pass through halfback, it's more chop. There you go. More chop. Chop it up. You know what I have not done today? I haven't looked at the daily. Let's step back and get some perspective here. Ooh. Not looking good on the daily chart. All right, so the market has got to get itself, if it wants to go higher, it's got to get itself back up into yesterday's range and start to push up today. If we close down here below this trend line, it increases the odds of further downside continuation come next week. Could be something that looks very similar to this. 1 2 3 4 5 6 7 8 9 10 11 12 13 14 15 16 17 18 19 20 21 22 23 24 25 26 27 28 29 30 31 32 33 34 35 36 37 38 39 40 41 42 43 44 45 46 47 48 49 50 51 52 53 54 55 56 57 58 59 60 61 62 63 64 65 66 67 68 69 70 71 72 73 74 75 76 77 78 79 80 81 82 83 84 85 86 87 88 89 90 91 92 93 94 95 96 97 98 99 100 101 102 103 104 105 106 107 108 109 110 111 112 113 114 115 116 117 118 119 120 121 122 123 124 125 126 127 128 129 130 131 132 133 134 135 136 137 138 139 140 141 142 143 144 145 146 147 148 149 150 151 152 153 154 155 156 157 158 159 And wouldn't it just be like the market to spend the day going sideways right here all day today? All day trying to convince you it's going to go up? Trying to convince you it's about to shoot through the moon, and then nope, get depressed. It's going to crash and burn. And then wait. Maybe not. Oh, yep, definitely going to happen. Like, it might want to play that game with us today. It's in a great location for it. All right, there's the gap fill and the CPI. The liquidity on Bookmap just went, "Hello, darkness, my old friend. All bets are off here once again. Let's find out what the CPI data says. And then we'll bet against each other for a bit. One side will squeeze the other hard and push it far. It's the sound of CPI." Who needs singing lessons now, Mark? Huh? Just for the record, guys, the singing sounding bad, that's part of the humor. If it sounded good, it wouldn't be funny. Okay? So, no singing lessons required. It's supposed to be a joke. Holger says, "I want to gift the e-course to a trading buddy." The only way we can do that, you got to just email me and I'll work it out with you one-on-one. But yeah, I'll give it to you with a discount, and you got to just find out his email address so that I can put it in the system. But yeah, just shoot me an email, ahoy@piratetraders.io, and I'll work that out with you. John says PMI was less than expected. So yeah, whatever that actually means for the market. That's the point. That's what's so beautiful about it. It doesn't matter. It doesn't matter. The numbers can come out and they can be terrible and the market goes up. The numbers can come out and they can be terrible and the market goes down. The numbers can come out and be amazing and the market goes up. The numbers can come out and be amazing, market goes down. It's random. Of course, when the numbers are good and the market goes down, they'll say, "Oh, it was already priced in." When the numbers are bad and the market goes up, they'll say, "Well, people weren't expecting that." But the truth is, it's random. All right, so we got back up into yesterday's range. We got the gap fill. Now we're going to find out if we're going to get a gap and go, or if we can work our way back up into yesterday's range. Working our way into yesterday's range increases the odds of more chop, but it is less bearish, obviously. No Faith. Ironically, I can actually remember where I first heard that song. It was The Graduate, the movie The Graduate. That scene where he's like floating in the pool with the sunglasses on after having just made coitus with a beautiful older woman and feeling like king of the world. All right. Well, the market's starting to give us information here. We're trying to get back up in yesterday's range. We're having an awfully hard time. The more we push up, the thinner the volume seems to get, the fewer and fewer people are willing to do business up here. We also got the ticks back to the zero line, and we were not able to stay above there. So far, we're not bringing in more buyers than sellers. So that would tell us that most of the business that got us up here were those shorts from the overnight taking profit. So we're looking at some potential resistance here. Can it hold? JPB, Alexa says today down. It would be fun. It's a funny idea to ask Alexa every day what's going to happen to the stock market and just track it. Or start asking one of those new AI systems that you're allowed to ask questions to. Like every day, just ask it, what's going to happen in the stock market today, and see if it's ever right. RK, it doesn't have access to the net since September 21. I didn't know that. That's so interesting. Okay, so there you go. Once again, the buyers fought a really good fight just now, trying to stay up there in the overnight range. They worked those ticks all the way back up to the zero line. Look at all this volume they brought in. They really, really tried, but they got nothing for it. So are they really going to keep trying? Or does the market need to pull back to halfback, looking for buyers there? Looking for support around 39.01. Alex, I'm in a trade as we speak. Nor Auto Trader. Q time. Q time. Ooh, okay. Actually, the Q looks good. So they got above the overnight high. Now the question is, can they turn this node right here, which it doesn't look like it acted as resistance at all. That was probably during CPI. Can we turn this into support? So same thing as the ES. Look for support right there at the halfback. 11 for, looks about 450. If they can hold that, they can go and head back up above the overnight high again. And if they can then find support above the overnight high, that would be bullish for continuation higher from there. All right, third time, resistance at yesterday's low holds. Still don't have the buyers. Do we have them at the halfback? 39.01. All right. Well, the tale of two markets here. ES is now officially, we'll call it just a little bit bearish. We're not going to call it officially banner bearish because, as I said, I want to see it get below this node. But it is obviously not bullish to fill a gap and then get rejected. That is a sign that you need to pull the market back, looking for buyers at a lower price. We didn't have them at the halfback, so now let's see if we have them down here in this node. If it breaks, then I get very bearish for continuation further. Alex says, at areas of possible support or resistance, do you look at the ticks versus the zero line or the ticks for a trend for confirmation? Excellent question. And the answer is both, right? So if the ticks are moving in a certain direction, right, if they're moving up or they're moving down, that is a sign of momentum in that direction. Okay, so if they're moving up, it's the buyers trying to push the market higher. If they're moving down, it's the sellers trying to push the market lower. The zero line is where we find out if they're able to do it or not, right? So here in this scenario this morning, it's not a great one for teaching, but here in this scenario, we opened with the overnight inventory very, very net short. So first we had to bring the market back to that zero line so that we could absorb that overnight activity, meaning giving all the traders that were short that want to take profits on those shorts a chance to. Okay, so they all had a chance to take profits. So we came back to the we came back to the zero line. And so then the buyers tried to keep it going. Those were the new buyers. They were right here. And they tried to keep pushing, but they failed. So now what's happening? We're starting to get momentum down in the ticks. So it's a sign that the sellers are trying to take control. So yeah, it's always when you get to one of those pivotal moments in the market where it could be getting support or resistance, you just click over and take a quick look at the ticks. And I mean, almost instantly in a second, you can see, are we trending higher? Are we trending lower? Where are we compared to the zero line? And you just kind of know, okay, I can trust this momentum or I can't. I can trust this support or resistance, or I can't. We'll use it right now as we test this node around 38.89. We'll see. Do the ticks bounce? If they do they get smacked down and the next tick just keeps going lower? Or does that bounce get us back to the zero line? We'll get some information. Market just created a poor low. A poor low increases the odds that it might push away from that poor low, looking for resistance, but that once it finds resistance, it will come back to repair. And I give you one guess what I'll be watching for. to see that resistance. Look for them ticks to get smacked down. There's the smack. So we've got some resistance, increasing the odds. We're going to repair the poor low. There's the repair. All right, so do we get support? All right, 89 didn't hold. Can 85, or I guess 86, can that hold? What are we noticing? That volume is getting thinner and thinner the further it goes down. Increasing the odds of support, as it is a sign there's less and less people selling down there. All right, there you have it, folks. No buyers. No buyers whatsoever. I am officially bearish. As long as we stay below the opening price at $38.99. So does everybody here understand why I've just made this call? I made this call before the market opened. I was looking for chop in between this node and the large one above. And I knew if this node breaks, it increases the odds the market is going to go lower. So I was waiting and waiting and waiting and waiting for our chance to test it out. And all it took was us getting here and me seeing that we didn't get that bounce. We didn't have that support to confirm a conceptual idea I came up with earlier before the market opened. And now I have a way to carry that idea forward, as I have decided before the market ever even opened. Breaking this node increases the odds of testing the overnight low. But then I wait and see, can we get new sellers down there for continuation lower? There's no thinking. There's no panicking. There's no worrying. What's the market doing? Oh no, is it this? Is it that? It's just, I planned, if it does this, I will do that. If it does this, I will do that. Having a plan ahead of time gives me the clarity to understand what's happening in the moment, because I'm not distracted trying to figure that out. Did you do the same? Did you do your homework this morning? Did you open up your charts and figure out areas where you would know what the market is going to do if it gets to this area and behaves this way? If not, you better get started. I won't be here next week. Morty, you will write on the chalkboard 500 times, I will make a trading plan before the open. I will make a trading plan before the open. Okay. So they're starting to push the market lower, but they're running out of steam here. We're making note of the fact that this is the same area they started to run out of steam in the overnight. So if they want to keep this market going lower, they're going to have to start bringing in some more sellers down here, which means I think we need a bounce soon to come back up and test some resistance. There it is. Ah, a little bounce, eh? So as always, what happens to the ticks? Are they about to get smacked again? There's the smack. Sellers remain in control. Alex, is there any benefit of watching both the ES and NQ tick charts, or ES tick chart sufficient? Well, to be clear, the tick that you see on the right over here, this tick, it's not technically the S&P 500. It's every single stock that's in the New York Stock Exchange. Okay. So just for clarification's purposes, it's not the S&P. It's everything. It's all the stocks. So you can kind of judge all the markets based on just tick, right? You can kind of use it for the Russell or the Nasdaq or whatever. The one that's the tick Q is just the stocks in the Nasdaq. So as far as like using one or the other, I would say if I was just a Nasdaq trader, if that's all I did was trade the Q, I would just look at tick Q. If all I did was trade the ES and didn't run a live stream where I also talk about NQ, I would only look at the tick. I just look at both because I'm talking about both markets. But to be honest, they very rarely have much differentiation between them. Alex, do I look at the breath? Yeah, it's the one in the top left here. That's the breath. And to be honest, I hardly ever look at it. Almost never. Old gringo, do you think the ES tick front runs the Q tick? No, no. I think it's all random, is what I think. I think right now, somewhere in the world, somebody is deciding to buy a stock that is in the Nasdaq. Why they're choosing to buy that stock has nothing to do with anything that's going to happen to any other stock in the stock market. I think each market is its own thing. Now, sometimes there are bigger forces at work. Sometimes there are just bigger forces at work that kind of make all the markets move similar to one another. But in my experience, there is no way to use one market to predict the other. So, for example, somebody left a comment a minute ago, JPB. I see Nasdaq and Dow leading the SPX. I couldn't disagree more. Today, maybe they're leading. Tomorrow, maybe they're lagging. The next day, maybe they're doing exactly the opposite. Maybe the Q is going up while the ES is going down. I've seen it many times before. So what happens is, if there happens to be a correlation, your brain convinces itself that there will always be a correlation, and therefore it is tradable. But if you try to trade it, you will lose money because there isn't actually a correlation. It's just a random thing. And in our brains, when they're looking for patterns, they will find them. If you tell yourself there's a way to guess what's going to happen with the S&P because of the Nasdaq or the Dow or anything else, your brain will find some answer for you. But it doesn't mean that that's good information. So that's why I always suggest you just pick one market and become an expert at that. You can trust that the S&P will move the way the S&P will move every day, no matter what. So just become an expert in the S&P. Don't worry about the others. Peter, it was yesterday's high. Or sorry, yesterday's low. The resistance at yesterday's low that I called 4 times. Martin, I went and looked at Window Trader. So for the light version, you don't receive the volume profile for each period. Correct. Yeah. You can only do the volume profile for the whole range, not the 30 minute by 30 minute. But I mean, that's what I traded with for the first year and a half that I was doing market profile. I used the light version. So it worked fine. Trust me. Alman, spy a big bounce coming to flush the bear's puts? Well, if you're right, they'll have to poke below this overnight low and fail to get new sellers first. But if they do get new sellers, I will disagree and assume the market's going lower. At least for today, anyway. But you're talking about the puts that expire today. I see what you mean. Well, if that's what you're looking for, you're hoping for a look below and fail. Alex, I love it. He starts with, I'll rewind the stream to watch later, but could you just go ahead and recap it all for me now? Oh, that's great. Yes. Okay. So to be clear, first and foremost, there is a difference between a opportunity in the market where I am personally willing to risk capital and take a trade, and when I am willing to change the banner on the screen and advise all of you to consider the same, because I am willing to be wrong and take risk and not feel pain that you all will, as I have learned from many, many angry emails. Okay. So when I make a call on the banner, it is when that call is based on market generated information. It is when the market is saying for sure this thing is going to happen. Now, the trade this morning was a little bit more of just me using my own personal discretion and experience to make a call before the market generated information officially confirmed it. Okay. So what I did was, when the market opened, I said to myself and you guys that I'm expecting chop between this node and this node right here, and that the market was likely to fill the gap. When it filled the gap, we would have an opportunity. I talked about this. We would have an opportunity to find out what the market is likely to do, whether it is more likely to break the high or break the low based on what happens at the gap fill. Can the buyers stay up inside the previous day's range, or do they get smacked back down? So then the market opened, we traded up, we almost filled that gap, but we left behind a weak reference. That further increased the odds in my mind, as I said, that we needed to come back up and test that area, but that it would not be because new buyers wanted to take the market higher, but instead be because the bots were creating liquidity. So the market came back up and we filled that gap, right? We had that random couple of minutes with the CPI where it was chopping all around. Okay, while I'm talking, we're about to head down and test the overnight low. So again, we're looking for resistance there. So we were chopping around and we were grinding around, and then we filled the gap. The market pushed down below. It came back up and it started to spend a little bit of time inside yesterday's range. And so I got on and I said, all right, here's the buyer's chance. If they can hold the market inside yesterday's range, I'll look for the market to go higher. But if they can't, it's bearish. What happened? Boom, they got smacked down. So I said, look at this. The buyers couldn't stay in yesterday's range. Look at the ticks. They just got smacked down. So we came down, we got some support, we did it again. I said, look, once again, the buyers couldn't do it. We're getting taper. We're not getting volume. We're getting resistance. Look at the ticks. We had a whole conversation about how you read the ticks as this was happening. Pushed down again, found support. Cha-ching, round 3. This time around, somebody asked me if I'm trading yet, and I literally said I'm in a trade right now. The market came back up for another time. It tried to push into yesterday's range. It failed to bring in new buyers. It got taper and it got smacked down again. So at this point, I said, I believe that the highest odds are that we're heading down to test this area here for support. If it cannot act as support, I'm looking to test the overnight low. What did the market do? It came down and it got no support here. Look at this, no volume. No one wanted to do business here. And so now I'm under the assumption we're heading down to test that overnight low. Now, I said this morning, if it gets to that overnight low and it gets resistance, I'll look for it to go lower. If it fails and pulls back up, I'll look for chop. That is still true right now. There's your recap, ladies and gentlemen. I promise you, I make this stuff very, very simple. So, speaking of which, where are we at right now? Well, we left a lot of single prints behind in the B period, but we also just created a poor low. And whilst I was talking, we got the push away from the poor low. So that increases the odds that we're going to try to repair it now. Once we repair that poor low, we will be beginning the process of what is called one-time framing lower, which is bearish. It's the beginning of a trend. Generally, we would consider that trend to be over if the market gets above the previous TPO's high. But because of the nature of the markets this morning and the overall bearishness of that larger trend line on the daily that I discussed, right, this one here, because we're now below that, I would say you could consider the halfback as good as cessation at this point. If they're going to keep the trend going lower, they should not pull back up above. Okay, well, now it's trending lower. Yeah, so they should not pull back above halfback, where it currently is right now. So 38.91, I would consider that area cessation. Unless they can get above there, the highest probability is they're taking the market lower. And of course, as I've said 200 million times, we're looking for sellers here. We're looking to keep those ticks below the zero line and bring in more volume for continuation to the downside. With that, I bid you all farewell. I wish you a Merry Christmas and a Happy Hanukkah and a Happy Kwanzaa and a Happy Hail Satan Day. I don't know, whatever your thing is, I hope it's good for you. And I will see you here next year. Thank you very much, ladies and gentlemen. Members of the brigade, let's set sail.